Hmm.
I think recently in the past, I think I remember seeing one of your videos. You were talking about rates versus like inflation and stuff like that. So I know like now everyone's scared, like with the price going up, inflation is going up, and everything. Like, what? How does that really affect mortgage rates right now?
Well, yes, inflation is on the rise. It's of all the reports that are coming out, it definitely seems that inflation is definitely something that we are going to be dealing with for a while. And interest rates do increase when we have high inflation rates in the country. Then the interest rates follow. So we are definitely in a rising interest rate market. You know, rates over the last couple of years have been at historic lows, lower than they've ever been. But we're going to see that steadily start to creep up a little bit over the next couple of years.
Yeah,
When I say creep up a little bit, I mean rates are still really good.
Right.
You know, they're
Yes.
still really good historically. They're just not lower than they've ever been. So a lot of people get freaked out and think, oh my gosh, rates are so high. But, you know, in the grand scheme of things, they're still amazing.
yeah, that
Really,
makes
So
sense.
why
really,
do
really low.
so why do the rates creep up? Is it kind of like quality control, trying to keep the inflation from going higher, or why do they do that?
So it's a little bit difficult to explain, but the as inflation increases, the value of that loan being sold on the secondary market actually decreases because if an investor can purchase a loan at 3% interest rate of return on their investment, or they can purchase a loan at 6% rate of return on their investment, which one do you think they would purchase?
Yeah, the higher.
They want the higher interest rate. So all of
Yes.
a sudden, this 3% interest rate loan starts losing value because nobody wants to buy it. So now, in order for that loan to be sold, they have to discount that price. So a $100,000 loan is no longer worth $100,000 when you've got a $100,000 loan with 6% interest over here. Now this one's really only worth like 75,000 or maybe 50,000. So
Yeah.
investors, so as inflation goes up, it causes the interest rates to rise. So then the investors want to purchase the higher interest rates, so the value of the lower mortgage interest rates go down, and it's just a cycle.
Right.
So do you see it like going up? Because I know at one point it was crazy low. It was like 2.3,
Yeah.
2.4, like crazy. And then like all of a sudden it started creeping up. Like I think it was like over like 1 week it jumped like 0.25 or something like that. Or do you ever see that continuing
We
along
had a
that
pretty
trend?
good jump there for a little while, but of course, you know, if I had a crystal ball, then I'd be a millionaire. It's like the stock
Yeah,
market, you know, you don't
Yeah.
know what's going to happen. So, you know, we can all sit back and summarize what we think. Oh, this is what's going to happen, or interest rates are going to go up, or they're going to go down. But it's all it's all a prediction. Nobody knows for sure.
yeah,
You know, you just kind of look at historic data over the years as to what's happened under certain circumstances, and you know, say, okay, well, based on that, what might happen. So I don't expect rates to go like super high by no means. I mean, I can remember my first mortgage was like 6%. I thought that was a great rate. So, you know, they're certainly not anywhere near that.
yeah. I
So,
bought
you
my
know, in the
first
grand
house.
scheme of things, I
I
think
bought
the
mine
rates
like
are still
5 years
really
ago.
low.
When I bought my
No,
house
for
5 years ago,
sure.
I believe it was like 4.5 or something like that. And then I bought another house 2 years after that, and it was like the rates dropped from like 4.5 to like 3 point something. And it was like the
Yeah,
rate wise monthly payment. I went up to like to buy the house like $100,000 more because the rates were still low. It was like the same mortgage payment, so it was like I was trading up, but everything was the same.
right. You got a bigger house and still the
Yeah.
same payment.
Yeah, and I think that's
Yes.
kind of something to consider. I think a lot of people right now they're kind of on the fence whether, hey, should I buy now or later? I think everyone thinks sees the price, but I think also like the rates super important also because that's more or less what you're gonna be paying
That's
monthly.
right. And the rates are still super low right now,
Yeah,
and
they
they are
are.
expected to increase. So you're going to be able to afford more house right now if what is predicted happens. You'll be able to afford more house right now than you would be a year from now because
Yeah,
that interest rate is going to increase. So the same house is going to cost you more in a year from now than it would today.
yeah, exactly, exactly.
Right.
Yeah. Well,
Well, if someone's Oh, I'm sorry. If someone,
yeah, go.
I just got this phone call actually this morning. If someone needs to fix their credit and they're claiming that there's some things on there that are incorrect, what do they do? Because, you've got a lot of people out there wanting money to help people fix their credit. I mean, what is
Mm-hmm.
the best way? Do you pay somebody or?
So